Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight the markets were once again very volatile after a disappointing inflation report sent the US dollar index higher. Since rebounding off the 101, the dollar index hasn't pulled back hardly and now close to reaching 104 as it trades around 103.95. The overnight rise came from an inflation report at a wholesale level which had slowed. The January Producer Price Index, or the PPI, came as hotter than expected, while the jobless claims were less than expected for last week, which has also again ignited concerns about how high inflation stands following the unpleasant CPI data earlier this week. Supplier prices, or the US PPI, rose by 0.7% in January from the prior month, the Labour Department said. From that, the dollar index strengthening, the Aussie has actually fallen further and now tackles the level around 68.55 where the 60-day moving average is. Beneath there, the key support level seen at 68.35. So as you can see, as we get closer towards this bottom side of the range, it is important to keep an eye on how the market trades here in case we see a breach. If so, that would open the way down towards 66.5. However, the indicators are a little bit to the lower side of the range, so therefore I do anticipate a bullish response as we head slightly lower. As long as we maintain above 68 cents, then I feel that we could see a rebound back to 69 to around 69.5. And with the dollar strengthening, we can see that the euro is getting prepared for the key challenge of 106.20, a level that's been holding for the last few weeks. However, in light of the heavy technicals and the dollar potentially breaking above 104, could see this level break. If so, would give further scope towards the region of 105. Any upside attempts should find resistance at this stage around 107. The dollar yen still holds to its gains since breaking above that key level, which was around 132.8090. And now very much on track, I feel, from the technicals that we're heading towards 136 as a potential target. With the ADX trending and also with the market holding relatively bullish, I feel any pullback will be shallow. Sterling still maintains to a negative bias as it now prepares itself for the challenge of 119.45. A break beneath there would give further scope to the downside, and with the dollar strengthening, should maintain further pressure on the support level. Wrapping up with gold and oil, the market still maintains to a negative bias as it now looks towards a challenge of 1,820.26. The ADX is trending to a bearish case, and also we're getting a little bit oversold. So once we reach, or if we reach this level, it does put me to a neutral bias, and therefore I'd rather sit on the sidelines and just see how the market plays towards this level. It is a key point because a break of 1,820 will give us a move to 1,780. Wrapping up with oil, the market's still pressuring this level, seen at 76.9095. I feel that as the technicals are remaining somewhat heavy, a break here would give further scope towards the region of 75.6080, where I feel a bullish ambush is awaiting, and maybe even see a bounce back towards the region of $80 to $82 a barrel. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report and I hope you enjoy the great start to the day.